So I will speak to the recent results that came out from Merck. So they had their second quarter results for 2022, just starting with the executive summary. So their thesis is centered around oncology, and they have a key drug that's coming from there, which is Keytruda. We're expecting this to be a pillar of growth in the short to medium term. Just to give you a sense of its contribution to group, it contributes around 35% to group revenue. Because of this and also cost savings from R&D, we're expecting the EBIT to expand from 28.5% to 35.3% FY22. This will also help in terms of strengthening the balance sheet, as now they'll be able to prioritize debt repayments, given that they won't be focusing on CapEx spend in this period. In terms of the valuation, we have an upside of around 12% to our intrinsic value. This excludes the potential acquisition of Seagen. Also, the new indications that have come into the market for Keytruda are also excluded in the valuation. So if we combine those two, they could actually lead to a further upside than the one that we've guided. On the downside, though, there's LOEs that will kick in FY23. It's at least 4 drugs, but they don't contribute a lot to the group. Also, Keytruda, which is the key drug, could actually disappoint. And this is for us a material risk, given that the drug itself contributes around 35% to group revenue. Another thing is governance and litigation. We've seen in the past that even in terms of multiples, they've danced around, given that there's been governance issues where the company has faced litigation cases because of side effects of their drugs. So that's something that I will remain wary of going forward. But overall, we have a buy on the stock, given that there's a potential upside of around 12%. In terms of the results that were released last month, so the revenue was up 28%. This was on the back of strong sales for Keytruda, as well as the HPV vaccine, which is Gardasil. They also had strong results. Gross margins actually declined to 71%, and this was on the back of inventory write-offs, as well as unfavorable product mix. But EBIT grew in terms of its absolute terms. It was up over 100%. The margin also expanded to 30.8%. Adjusted diluted EPS also grew by over 200% for the period. The company also issued a dividend, which is reflecting a 6% increase year on year. So they were good results.
Thank you very much for joining us today.